What's up, everybody? It's Meech. You're tuned into On the Radar, where we cover health, fitness, and tech. So I told you guys we were going to be getting into the Robinhood app. I'm going to show you guys, give you guys more information about investing and just take you along what I've been learning. Now, as I told you guys, if you do or you don't know, I am not an expert. I have to throw that out there right away. I'm just starting off. I've only been doing this for about a month, maybe 2 months. My time's always off. But I definitely want to show you guys in real time as I'm learning. I'm going to show you guys, that it's not hard, it's not difficult, it's not rocket science. We all can get into this. We all should be involved in the stock market. We all should be involved in investing. So if you're not subscribed to the channel, definitely subscribe. Again, like I said, we cover health, fitness, and tech. We're going to be doing credit. We're going to be doing investing. So we're doing a lot this year. If you're not already subscribed, definitely subscribe. There is a link in the description if you want to sign up for the Robinhood app. It doesn't cost you anything. You get a free stock to start off. I get a free stock if you use my link, and we all benefit. Now, you can take that free stock and just start learning just with that. And again, it doesn't cost you anything. So there's no real reason not to get involved. So with that said, check the link out in the description, but we're going to get into this. All right, so we're going to talk about dividends. That's going to be the main point of this video, but we're going to touch on some other things regarding stocks in general. There's two ways to make money off of stocks. If you buy a stock, let's say you buy a stock for $20 and over time it grows to $40. Now you will have made $30 each share. So you can either take those shares and sell them and pocket that money. You can sell the shares and reinvest it into other things with that profit, or you can just hold it. Most people generally hold those stocks and they just hold on it for long periods of time. They end up buying more and more stocks, and that price just keeps going up. And obviously sometimes that price can go down, but that's where all your strategy and understanding comes in. But we're just talking basics right now. So if you buy a stock for $10, it ends up appreciating and it ends up being $40, then you made $30. So for instance, if you had Amazon is currently somewhere around $1,900 per share. So if you bought that early, let's say you paid $20 per share and you bought 20 shares, and now each of those shares are now worth $1,900, you have a significant amount of money that you've made back. So again, you can either take that money and do what you want with it. You can hold it, you can cash it out, you can do whatever. Now the other way that you can make money on your stocks is a lot of stocks pay dividends, meaning when you buy shares of stocks, you're becoming an investor into this company. You're becoming an actual part owner in these companies. So when the companies make their money quarterly, you make money also, because your money is invested in that company and your money is how they're making money. So the dividends is what they pay out quarterly to you based on your shares. So AT&T, for instance, I had 10 shares of those, and each one of those shares pays a 51-cent dividend. So I'm going to be getting back $5.10 off of that dividend. So if I just hold there quarterly, I would be making that each quarter. So that's 4 quarters. So for 4 quarters, that would be 5 times 4. That would be $20.40. So look at it like this. If you invested, I don't remember the prices at the time because now I have more shares. But let's say I paid $10 per share, right? So that 10 times 10 would be $100. So if I spent $100 on those 10 shares and I'm making $5 back each quarter, for the year I would be making $20.40 a year. If you put that money in the bank, if you put that same $100 in the bank, you wouldn't be making $20 back in interest. So that's the way you look at it. You look at it, and now the more shares you have, the more that those dividends are going to compound. So think about it. Currently I have 22 shares of this AT&T stock. So I'm just going to keep buying and buying, and those dividends are going to keep adding up. Now, as the price goes up on these stocks, I will be making even more money, and then I can, like I said before, either take those stocks and hold it, sell it. I can do whatever I want to do. So there's things that you need to know regarding the dividends. So it's something called the ex-dividend. There's the declaration date, then there's obviously the payment date, there's the recording date. So what you can do is there's several different ways you can look this up online to find this information. I'm currently using NASDAQ. I'll link it in the description. The stocks go by ticker symbols, so that's how you find the stocks if you're looking them up. So AT&T, for instance, the ticker symbol for AT&T is T. So if you're searching anything regarding stocks and you're looking for that particular stock, you would just punch in T, it'll pull it up. So you take the NASDAQ, for instance, and I pulled up the dividend history. So I can search the dividend history of all whatever stocks I'm looking for. So using AT&T, you pull it up, and it shows you the ex-dividend date, which is 7/9/19. So the ex-dividend date, let me read it to you exactly what it means. The ex-dividend date is, it's normally 2 business days before the record date. If you purchase a stock on or after the ex-dividend date, you will not receive the next dividend payment. If you purchase before the ex-dividend date, you will get the dividend. So some people strategize and say, okay, they find out what this particular stock is going to pay. Then they go say, okay, it's paying $1, it's paying 50 cents. I'm going to go grab up a whole bunch of those stocks. And they take it and say, okay, what's the ex-dividend date? Because if they get in before, they can buy all of those stocks and be eligible for the dividend, the payout. And then they can take it right after that date, and then they can sell the stocks and then still be eligible to get the dividend. So it's different ways people strategize if you're trying to do it that way. But it's important to know the ex-dividend date. Also something else called the declaration. The declaration date is the date on which the board of directors of a company announces the next dividend payment. This statement includes the dividend size, the ex-dividend date, the payment date. Declaration date is also referred to as the announcement date. So here's another thing. When you buy these stocks, they have these quarterly meetings and announcements and stuff like that, so you can have access to that. You're a shareholder, so you get access to the shareholders' meetings. You get to find out how the company's performing, what their projected revenue is. Did they do good? Did they do bad? You get into these actual meetings through conference calls. And I got in on one yesterday, I think for Verizon, or it was Microsoft, it was one of those. And I got to hear, you know, the different information, the questions and all that. But this is where they lay out this information. And if you miss those calls, if you're not in on those calls, you can just look them up and find this information. But it tells you when the ex-dividend date is, the declaration date, when the payout date is going to be, how much they're going to pay out. Because even the dividends, the companies decide each quarter how much they're going to pay out, because it depends on, you know, their current money situation. Sometimes they're making less money, so they may or may not want to increase the dividend. Sometimes it's just things fluctuate, so you have to stay on top of what's going on, basically, because everything doesn't stay set in stone. Back to the dividends, just to keep this simple, right? If AT&T, their current price is valued at $32.74. So their dividend payout, we know, is 51 cents. So if I take this $32 and I times it by, let's say, 100 shares. If I take this 100 shares, now mind you, I'm just doing these numbers as an example. Now you can, you know, obviously you can scale it to whatever you can afford at the time. But this is just to put things into perspective. 32.74 times, let's do 100 shares, times 100 shares. I did 1,000, I shouldn't have did that. So if you bought 100 shares of AT&T right now, that would run you $3,274, okay? So again, this is just for reference. You can buy it all at once if you have the money. You can do it over time, it doesn't matter. But so you would be investing $3,274 in this stock. That would give you 100 shares of this stock. So if you had 100 shares of this AT&T stock, it would pay out a dividend rate of $51 each quarter. So 51 times 4 for the year, 51 times 4 would be $104 per year that you would make off of dividends off of this stock, investing $3,274. So now ask yourself this. If you had that same $3,000 in the bank and it was drawing interest for the year, would you make $204 off of that? No, you know you wouldn't. So that's the way I look at it as far as dividends. So you take those dividends, you can reinvest it into your different stocks. You can pull it out and do what you want with it. You have that flexibility. Now, you figure if you have, you know, if that's just one stock, if you have money in these different stocks, you're generating all this different dividend income. So that's just the way I like to look at it. It's the simplest way to, look at it. Yeah, there's different variables and stuff like that, but for the most part, that is the easiest way that I look at it. If you're making $204 quarterly for the year, you're also going to make more money as that stock grows. So you're making money in two different ways off of that $3,000 investment. Now, you tell me where else can you take $3,000 and, make that type of return. So it's a way of looking at it. I think that's, I hope all this stuff registers. I'm trying to, so that's pretty much it. So what I did with my AT&T stocks at the time, I had 10 shares. As I said, I'm going to be making a $5 dividend payment. So I went and doubled it and more than doubled it. Now I have 22 shares. Now I missed that ex-dividend date. So now I'm going to have to wait till the next quarter to get, more of a payout. So by that next quarter, I'm planning on trying to have somewhere around 100 shares. That's my goal because, I want to be able to get that type of payout. So that's my strategy right now for just dividends. I have different companies that I'm investing in and getting dividends. Some companies I got, a small amount of dividends. There's one particular company I got I haven't received the dividend, but I've gotten it. I was in by the ex-dividend payout. I took the stock and sold it. Now here's the thing, this particular stock, I was gonna get 24 cents total in dividends. And the stock itself had went up only 60 cents. Now I did some more investigation into the stock, and I determined it wasn't the best stock for me to be investing in the long term. It wasn't really a lot of upside, and there wasn't as much dividend payout as I thought it was because I was still understanding at the time. So what I did was I was locked in for that 24 cents. I'll take the 24 cents, but I took the shares and sold the shares and made a 60-cent profit, which isn't much, but it's more than I started with. So I took that payment, that I got back, and I just reinvested that into some other stocks, actually the AT&T stocks, and bought more stocks with that. So it's different ways of strategizing. Now, just so you know, when you sell your stocks, you get that money back pretty much immediately. So you have that flexibility. This is what they call a liquid movement, and your money is liquid because when you put this money into the stock market, you can kind of always pull it out at any time. So you still kind of have access to it. So for instance, this AT&T stock, I'm making the dividends off of it, but I'm currently down $15 in total of my value, right? So it's not an issue right now. I don't care how much this drops. I'm staying in this for the long run because AT&T is one of the better dividend companies. So they're solid. So the drop down isn't going to affect me, like I said, unless I'm looking to sell, which I'm not. So this $15 that I'm currently down on this stock, I'm not stressing it. It'll go back up. But again, the more it drops down, I'm going to go keep buying more stocks the lower it gets because it will shoot back up. So the point is, if I wanted to sell this stock, if I wanted to sell right now, if I wanted to sell all of my 22 shares, I would be losing $15.75. So you wouldn't do that. But if you wait until it grows and gets back up, and then if you wanted to sell it, what you would do is you would wait until you at least break even. So it's just understanding the market and understanding how to maneuver. But I hope that helps. Hope I wasn't too confusing. I'm going to do some more videos explaining more of this dividend process, show you some more dividends that, different companies that pay higher dividends. I'm going to tell you guys what dividend aristocrats are, which that's something that you definitely need to know. And I'm just going to get more into my actual portfolio, the stocks that I'm holding, and how much I have invested if you guys want to know, because as I said, I'm showing you guys this stuff real time as I learn. So I just want to be transparent and show you guys so you guys are not fearful of investing and getting started, because I keep telling you how easy this is. Now, again, some of this stuff that I'm explaining, it may be the way I'm explaining, it may come across as difficult, but trust me, it's not. If it's not clear, I'll fix it in the next video, but just try to definitely digest the basic concepts of what I was saying. Just look at it as you're investing a certain amount, you're getting a payout, and you're making money each quarter off of this money. And at the same time, if the stock goes up, you can make more money on that stock. So you can make money in 2 different ways off these stocks. One more of a long-term way, more of an immediate, quarterly payout. So just look at it like that. I hope that helps. Again, there is a link in the description if you want to get the Robinhood app. You get a free stock just for signing up. You don't have to purchase anything. And I get a free stock if you sign up. Now, there's also another app that I'm involved in called the Stash app. It's very similar to this one. The only difference is you can purchase partial shares. So I'm going to explain that in a different video, but just check it out because it's the same thing. You can sign up for that free of charge. You get a $5 credit, and then I get a $5 credit. You can take that $5 credit and you can invest in your first set group of stocks. So just real quick, even with that, on the Robinhood app, you can't purchase partial shares. So if you use the Stash app, you can get into the partial shares and the group shares. So you can get into, let's say, stuff like, there's one that I'm in, the blue chip stocks, where you have Amazon, Johnson & Johnson, just all the high price stocks, Apple, all that type of stuff. All of these stocks are $200, most of them, and up. Amazon, I told you, is $1,900. So instead of buying whole shares, you can get in and get pieces of each share and keep building that way. So there are 2 different apps that have 2 different functions, but it's doing the same thing for you. But it's good to be invested in both, in my opinion. I'm invested in both. I will be showing you guys that other app soon. So again, you can get into both for free, and you have nothing to lose, and you can get started. You can start learning. So check both of those links in the description. If you know other people who are interested, share my link with them. Encourage them to get involved in investing, because this stuff is so important. And most of us are either we don't get this information, or most of us are afraid. Most of us think it's so extra complex and difficult, and it's not. It's things you do have to learn, but it's not rocket science. You just have to be aware, and you don't have to be fearful once you start understanding. So I'm going to leave it at that. Anything else you might want to know, any questions, comments, leave it in the description. Again, until next time, stay focused, stay fit. Please hit that like button, show your support. Definitely, please hit that notification bell so you'll be alerted the next time something else pops up on the radar. Salute.